All right. Is there anyone you want me to start, Sean, or you just kind of want me to like do what I was thinking about doing? I mean, I can do either.
Um, no, yeah, you could jump right in. The only, I mean, really specific question I had, well, I guess I have a ton, but
Yeah, yeah.
I never really know kind of like where to go in aside from, I go
Like
on
where
like
to
Yahoo
jump in.
Finance.
Oh, okay.
Yeah, and like I see like, oh, there's a ton of people. There's like 2,000 people that jumped in on this one today. I'm just gonna do it. But
Yeah, the
um,
volume. I see. I see.
yeah,
Are
I
you
go
checking out like
mostly
the
on
open
volume.
interest or something?
Open interest, yeah, but open interest is like
That's just like
volume, but
contracts that are
not from
open.
today. Yeah. Okay.
Yeah,
Cool.
exactly. Okay, great. Yeah,
Yeah.
yeah. I'd say that definitely identifying like the entry is probably the hardest part. I mean, that's all, timing the market. That's what everyone wants to know how to do. So that's, the reality of it is that, I'm not going to be able to time the market, and no one is. There's going to be some people who like luckily and coincidentally sold, in February right before everything crashed, and they bought at the bottom. That percentage of people is like 0.001 though, and there's also a lot of people who probably bought in February and were like, shit, this sucks. And then they probably
Yeah.
sold. And then they saw it all go back up and they're like, I hate investing. That's how I
Yeah.
think it is. But
That's kind of what happened. There's like a mini one that happened in like September 1st or something. And I
yeah,
kind of
this
felt
recent
that.
sell
I
off.
was like, I thought I was just a genius. And I was like, oh no, it's just everything was going up. And now I'm losing all my money. But
I know, right?
yeah.
But yeah, I mean, and so what I'm going to kind of like demonstrate here is like, we're not going to time the market. We're not going to guess where the stock is really going to go. We're just going to be using trending stocks. So those are stocks that like have been turning out positive returns year over year over year. So for the last 5 years, I wouldn't, it's really not a good idea to like trade options on like a new stock, like a Nikola or like a Snowflake. There's you don't know what the history is, how they respond, or if they're too inflated or what it is, right? So really, we want to be just looking at strong companies that have decent growth with low debt. We're still good value, good companies. Apple, Costco. I have Costco up here because it's actually a company that I'm looking to buy some calls in, and we were talking about that. And I'm going to show like kind of, I guess, what I would look for or how I'd find, like if I had no leads as to like, oh, okay, I'm kind of interested in buying calls and blah, blah, blah. Right. So if I'll go through like a screener, basically. I think screeners are really helpful, and Yahoo probably has one of the best free screeners. Another screener I like is FinViz. They've got a good screener too. And
Got it.
I'm going to
Do
use
you have to like have an account or anything, or do they just
no,
post it?
it's all free. And then this is a cool website that I found recently, and it actually shows you the history of like a company's all their numbers. So you can see like the history of like their price ratios, and let's see, like you can see there you go, like Costco's price to sales over the last like 10 years. Like I think
Got
this
it.
is really valuable information.
Yeah, and they're just raking it in.
Yeah, and they actually I didn't know that this, but they have a PPS lower than 1, which is kind of insane, which is actually really great. That's kind
Did
of,
you
yeah.
did you see that article where like the CEO,
Oh
or
yeah,
no, like the founder told the
yeah.
current
Jim
CEO that if he
Sinegal,
raises,
he
yeah,
says,
he's like, if you raise the price
I'm
of the
gonna
hot
fucking kill
dog,
you.
I'm gonna fucking kill you. That was so funny.
Dang, kill someone over
um,
a glizzy. That's
yeah,
funny. Okay.
and
All right.
still killing it. Even though they're not
Yeah,
raking
I
up their
think
prices
so.
that much. Yeah.
No, I mean that's their whole thing. It's like get the membership, and that's how they make money, pretty much.
Hmm.
All right. Well, why don't we just start with a screener here? I'm just going to use the Yahoo Finance. I think Yahoo Finance does have probably most of the information you'll ever need. There's some information on FinViz that I like, and the only difference on FinViz is that it's really easy to like. I don't even know this company, or I'll click on Alcoa. You can see like insider um, buying down here at the bottom, which is actually I think really really key to knowing if the insiders are buying. That means at least they think the stock's going to go up. I can't say much about selling, but there's certain things on different, sites that have different screeners with information. Sometimes, there's something on FinViz that you just can't find on Yahoo. So it's helpful to have a couple different screeners, but we're just going to use Yahoo. So let's just create a new screener. I'm
I don't want
basically just,
to.
yeah, go
Sorry,
for it.
Polly. I don't want to. I don't want to bog things down too much. But so, I mean, who gets classified as an inside trader, and how many
Sure.
are there, and like how do you base anything on that?
I mean, so an inside trader is someone who's like, who works for the company, right?
Got it.
So it tells here this person, Neville's James E, is the director of Alcoa. So
Oh, got it.
he's been buying since April, and it's by 1,000, 1,000, 2,000 shares. So he's been doing a lot of buying. Him in particular. I mean, you can probably. I wonder if you
Got
can
it.
open this up to be more, but I could look at. I don't. Apple. I don't know what kind of insider buying they have, but it's kind of fun, and I think it's interesting. Oh, look, Timmy Cook has been selling some, but then you see some people exercising some options. It's not always a bad thing to see someone selling. What I was telling Joe the other day is that selling can be like, anyone could be selling their shares for any number of reasons. Maybe they've been holding for many years and they're just trying to, they just
Cash
want to
out.
realize their gains. It's not that they're not bullish anymore, but what I do know is that when someone is buying, they're buying to hold and make money. So I
Mm-hmm.
wouldn't look at this and say, okay, Apple's going in the tank because look at all these people trying to sell. If these were all like people buying, I'd say, wow, they must think that something's going to be coming soon. Right. And they think that something may be, I wouldn't just use this, but I think it's a really great indication. And especially if you're looking at smaller companies, Apple's a big company, so they've got there's so many shareholders, right? So if you're this probably makes more of an impact if you're looking at like sub $5 billion companies.
Mm-hmm.
Okay. So that's how I look at it. I joined something called the Micro Cap Club, and a lot of them, they're small companies. They're sub 300 million. And a lot of those guys, I don't actually get to join in the conversation. That's how like their thing works, is you have to like submit an application, but I can watch their discussion threads, which are really insightful. But it is like a couple $100 a year. But I think for me, it's worth it. I don't know if it's worth it for everybody because, blah, blah, blah. But one thing that they really emphasize is if like, the founders, if the CEOs are doing insider buying when the stock dips, like, are they buying at the dips? And if they're not, or if they're selling, then they actually, that's a concern for them. So,
Mm-hmm.
so that's how I'd look at it. But yeah, they're just people who work for the company or affiliated with them. And we'll just look at mid cap, large caps, and mega caps. And let's add some filters here. So we want it to be optionable. Don't know if that's gonna be an option, but let's see. Where is our income? Do we see any place for like how it's done? Let's see, return here. No idea. I usually use Schwab actually as my screener, but there's a lot of different options. Or maybe FinViz will be a better screener for me actually right now. It's a little easier to navigate. Let's see, fundamentals and return on blah blah blah. So this is okay. Just to refer to what we were talking about, FinViz is cool because you can see insider ownership. Do they own more than 30% of the company, right? So that's like, wow, there's a lot of insider ownership there, or the insider transactions. That's like transactions that have been happening recently. So over 5% means there's been more buying than selling, right? And I swear there is. Do you know where it might be, Sean? Where it's like, okay, the 1 year return, price change. I mean,
No. Oh, no, I don't know. I just started using. I mean, I started doing this a couple months ago, but then I started
Yeah.
using Yahoo Finance like a couple weeks ago. So I'm still a little new.
Okay.
I
Well, I
mainly
think.
just been using it for like volume, to see volume and
Yeah.
yeah.
Let's just choose companies with strong fundamentals then. Okay. And then we can choose, let's see, revenue growth. We can look at a margin. Why don't we look at the Ebitda margin? And then what's another good fund? Let's look at a ratio, current ratio, or no, quick ratio. And yeah, let's see where that takes us, I guess. So quarterly revenue growth, let's choose higher than 15%. Ebitda margin greater than 10%, at least for now, and then quick ratio greater than 1. Okay, we could break the Ebitda up to 15 probably. And quick ratio, let's take that up to 1.5. Ebitda, that's earnings before income, taxes, depreciation, and amortization. It's basically like, it's very similar to revenue, but it's just a little different. And the quick ratio is basically just telling you if they have more cash or more debt. So a number greater than 1 means they have more cash than debt, more assets than liabilities, actually, you know.
Got it.
So I just look for companies that just, you know.
What about EPS? I know on like Robinhood, they simplify it just right down to EPS.
Sure, yeah. Earnings per share. That's, you know, a lot of, some companies won't be returning an earning, but yeah, I mean, these companies will probably return an earnings. So we could have earnings per share.
Yeah, like I've seen it be pretty dang negative and the stocks still fly up, you know, which is interesting to me.
So, you know, definitely the big companies, you know, like you're going to see like a Nike or like an Apple or like a Costco with an EPS of positive EPS. So it's definitely, I wonder if we take away mega caps.
And does that just mean that they're going to pay out dividends, or what does that really, or does that guarantee it?
Share, it's just another way of like talking about earnings, right? So earnings are different from revenue, because revenue is like, you know, what you make when you sell it, and then earnings is everything after all the costs of like the sale and the costs to realize any of that money, right? So a lot of companies don't like make any profit, but they make like a gross, you know what I mean? So earnings per share is just like a way to say, this is how much, you know, if Apple made like $5 billion in a quarter and they have 5 billion shares, then they have an EPS of 1, because they're making $5 billion per 5 billion shares. You know, 5 divided by 5 is 1. You know, it's a different way of saying they earned $5 billion. So a higher earnings per share means that they're making more money than outstanding shares they have. And outstanding shares just means the shares that they've like issued, right, to the public.
Got it. Okay. It's kind of like, I mean, is it kind of like printing money? I mean, like when you give out more shares, do you kind of dilute the stock value?
Yeah, that does that. They dilute the stock, definitely. So when a company issues more shares, it dilutes the stock and technically makes your stock less valuable, you know, just a little bit less valuable, because now there's more shares. You know, think about supply and demand. If there's more supply, the demands, it still may be high, but the value may be lower, right? You know, an apple is going to be more expensive if there's only 10 apples opposed to 100 apples. But that's, you know, it's a good thing when you know, share, you know, increasing, you know, diluting shares is a good thing to expand. You know, they have to do that to expand. Otherwise, you're going to have a stock that's got like, you know, whatever, 1,000 outstanding shares and your stock's worth $1,000, right? So that's not really, you know, what's the point of having a public company then?
Yeah, it makes it hard for people to buy them unless they could do like fractional shares, which don't matter that much.
Yeah, fractional shares. I don't like doing that, but I think it's a good thing for people who can't buy into like, you know, full shares, which is fine. And I'm still curious if there's like something that's going to show us about the growth of like the company price change. You know, where's the 52 week? I'll just see how low, you know, 52 week price change. Choose high and low. Okay. So the 52 week price high. I wonder how they're doing this. I wonder if it's like the 52 week high is this many points greater, or if this, usually it's like the stock is this much lower than the high. 52 week price high is,
maybe they mean it like really literal, like Apple's at $1.12, or, you know, and
I think it's asking me like, okay, like 52 week price high is greater than 120. So this would only take companies that are greater than $120, I think, maybe. Let's see. I have no idea. But I'm not really sure what it's giving me, so I'm just going to change that filter. Yeah, I don't know. Schwab has a really good screener. You know, that's the one reason I just don't like Robinhood is they don't have a great screener. I do like how their option chains are set out, though. That is, I will give them that. I really like how their options chains are set out, and that's why I opened up mine. 52
Yeah,
exchange.
I just think like, yeah, they're just a kind of clean, fun mobile app, kind of.
Yeah, it's
To your
definitely
point.
easy, and I think it's, you know, it's approachable. So that's why I like it.
Yeah,
I just wish they didn't have confetti every time you bought something.
dude, totally. I read that blog post of yours and I was like, this is so true. It's way too fun. Like,
Right?
you know what I mean? But yeah, no, literally every single one of my friends uses Schwab. I'm the only Robinhood guy because I'm the noob, but I definitely have interest in getting to know Schwab better too.
So okay, let's just come down the line here, okay? And we can just we can just look at companies that we've recognized. So I know Intuit, they're a good company. I know Activision Blizzard. I don't really like them actually. I own them. I used to, but let's check out Applied Materials. I love Viva Systems. I'm such an idiot. Like 5 years ago, I was like, I think this is going to be a great company. I never bought it because I always thought it was too expensive, and it's like consistently grown like 20% every year.
Dang.
And I'm just a fool for not like thinking that, oh, I should just have invested. We'll just pick Etsy. I think Etsy is a pretty well-known company. Let's see here. I like Globing.
Square. Wait, that's not the Square though. Right?
This,
yeah, that's a different one.
That must be some like foreign or international company, I'm guessing, because it has some weird like ticker there.
Mm-hmm.
And let's see. All right, well, that's probably good what we have there. So you can also do charting on Yahoo. I just think it's actually a little, you know, it's pretty good on here. The only thing I just don't like about it is the drawing. When you draw lines, it does this thing where, like if I'm going to draw a trend line, it like has this little purple bar pop up, and it just kind of gets in the way sometimes. But we will look at this. Let's look at 5 years. All right, see that's good. That's good positive growth, right? You know, I think you know, I've tried day trading and swing trading, and personally, I'm just not that quick. You know, I can't interpret those charts like within minutes. Like I can't do that. So, you know, I want to look at the weekly charts. If I'm being honest, that's what I do. The weekly charts, and then I look at the daily charts. I just can't. I mean, if I really want to like see maybe like what the price movement for the day will be, I'll look at like the lowest I'll go is 10 minutes. Lowest. I've never had good success like trading weekly options. And you know, recently I've been trying to do it just because I've been, you know, I'll see if I'll do it, you know, can do it again just for fun. I put like a very small amount in there. I've, you know, lost like 30% of it already. It's a couple $100,
Mm-hmm.
which is just like, okay, it's just for me. Some people are really good at it. You know, they can really understand like short-term movements. I can't. And, you know, some people can. But what I am going to show is using support and trend lines. And I'm going to, you know, that's basically the same thing every trader does, just on different time frames, you know? Okay.
And so is day trading, is that kind of a loose term, or is that literally, you know, buying a stock in the same day, selling it?
So, you know, when you think of traders, so here's the 4 kinds of traders. There's scalpers. Scalpers are people who buy and sell within like 20 minutes, maybe shorter, like 5 minutes. Those are called scalpers.
Paul had a great post about it yesterday on his Options Club Instagram.
Oh, really?
Oh yeah. It was a little thing on like the 4 types of traders. So the second one is a day trader. technically a day trader is someone who buys and sells in the same day, but they'll buy at the morning and sell in the afternoon. But you can always roll that over to the next day. And technically, once you roll that over to the next day, that counts as a swing trade.
Got it. And so I got into some trouble on Robinhood because something happened. Like I bought a option and then like literally within the same day, it went up like a couple $100 and I'm like, cha-ching. And so I just cashed out and then it said, you can only do this 3 more times or you're going to be classified as a day trader and have to do this stuff, or I don't know. I don't know what it said.
So I'm sorry.
But it's like for
Joe,
tax purposes.
Can you text Brandon though to let him know that we're like actually going through some quality material here, so he doesn't, because I just don't want to text him. Our friend Brandon was like, oh, is it? Because I told him like a bunch of people would be coming in here at certain points, and I think there might be some people hopping in whenever. I just don't know when. But yeah, that's called PDT, which is like pattern day trader rules. So if you have under $25,000 and if you have margin and you're under $25,000, you can only do 3 day trades in one day. That's the PDT rule. It's a mouthful.
Got it.
If you're just trading on cash though, I think you can do as many as you like. If you're just trading on cash, you can do as many as you like, definitely.
Okay.
I in my Robinhood here, I have it on margin because I've always just used margin. If you know how to use it, then it's great. But if you don't, then it can be really dangerous.
Mm-hmm.
Yeah. So Robinhood, I mean, not Robinhood. Yahoo definitely has, pretty much everything you'll need. But let's just take it over to TradingView because I think that I don't want to join for free. Reload. Because I like these graphs just seem quite clean to me. And we can look at Intuit, or we could look at any company you want to look at. Is there something you want to look at and we can, analyze it? We can analyze Costco too.
I like Costco. Yeah. Just because we were talking about it on Discord and
Totally.
What do you think, Joe? Joe might have stepped away. Oh yeah.
No,
Okay, cool.
I just got myself on mute because of the dogs. They wig out every Sally's Sophie's staring wistfully out of the window, waiting for the cat to appear. She lives with the cat.
That's funny. Okay. Yeah, let's do Costco. So, I don't think you need a lot of indicators. I mean, really, all you need is maybe to see the volume down here at the bottom, and you need the chart, and then you just need to be able to draw trend lines and maybe look at a couple moving averages. And this is, we call this a naked chart pretty much. We don't need to see a bunch of Bollinger Bands, other types of lines, regression lines. Those are good. I use them. I look at them sometimes because they make things, simple, but you don't need it. You really don't. Do I need a regression line to tell me that the stock has been going up? No. I mean, look, it's up. What else does anyone need to say? Do I need to see Bollinger Bands here? No, I don't. The thing is with indicators, it's everyone's using them, right? So everyone's using all these indicators. If you want to stand out, you don't want to be part of the crowd. And the way we're going to stand out, we're just going to simplify it. That's how I think of it, right? Why would you want to, follow the crowd and follow them over the cliff, right? That's kind of how I'm seeing it. Someone's always going to be ahead of you is my idea on it, right? Someone always is probably going to be able to outsmart you with this stuff. Some people have intense algorithms to do this kind of stuff. So let's just avoid that. And we'll just simplify it. So here, this is all I'm doing for trend lines, okay? Here we go. We'll start back here in 2018. All right, and let's just start right here. These are weekly charts, by the way. So we hit a little low right there, and we just draw a trend line up, okay? And then you see it comes down, and we're gonna hit another trend up here. And I'll explain what all these means after I'm done kind of drawing them. Okay, here we just gonna keep going. And these are weeks, remember, so we're not these aren't like days. This is a couple of years here. Okay. I wonder if I can do a couple horizontal. No, I'll just do the trend lines. Okay. So these upward lines here are the trend lines, right? They're following a positive trend. There's been a great run up here with a couple pullbacks. So how would you identify when to enter, right? You don't want to enter when the stock is trending upwards. You want to catch it on a pullback. And I'm calling those PBOs. It's pullback opportunity. Or you're either looking for a pullback or you're looking for consolidation, okay? So if let's say I'm watching Costco and I've watched them all this time, okay? So right from here, we see Costco's coming up, right? I'm gonna draw a little trend line right here. It broke above this previous high. You know, we can even see this green little bar right there. You know, that would be our indication. Okay, it's broke above this resistance line. I could buy, if this is a week too, by the way, like, do you really need to have, immaculate timing? No, you could buy right here and you could buy the 3-month option, and you could, once you make whatever you're looking for, you sell it and you make your profit, right? And you say, okay, well, what if it comes back down? Well, you always put a stop loss on your options, okay? Always put a stop loss, right? So when we have the stop loss, then we can never lose more than what we're willing to lose, you know? And if we're waiting, we're not timing. We're waiting. It's all about patience. So we're waiting, and you sell when you have your the profits you want. Even if you're waiting until it has a big pullback like this or this. Look, you're still way above what you bought at, you know. A $15, $20 difference is all you need to make 40%, more than that. Okay. So let's just say we come up here, and okay, this is interesting. See this? It's pretty close to that support line, right? So it found support down here, but where is its previous high? Right there. And we're going to draw a trend line right there. Great. Okay. Pulls back. I would not call this an entry point. You don't know how much further it can go. No entry point. No entry point. It seems like it had support there. Okay. These are all basically about the same lows. This is a lower low. This is not an entry point because it's lower than the previous low. This is a downtrend right here. It's not an entry point. Okay. We see the stock hit its lowest low in this cycle, in these like couple months here. All right, hits a low low, hits a bit of a higher low. That's the first indication that we're almost ready for a buy. Okay, you could take this entry point and say, okay, well, I think that it's going to keep going up. That's one way to look at it. Another entry point would be up here. That would be a more surefire entry point. Okay, so this is a bit of a riskier one just because you don't have that indication that it's going to reach above the previous high. But if we do come in a bit closer here, okay, you can see that it comes down, dips up to kind of this recent high, comes down again, that's a little pullback, and then breaks up above it. So that's a solid indication that it's going to keep climbing up. All right, climbs up, it climbs up, consolidates right in here. All right, we've kind of got a little, I wonder if I can do a little box somewhere around here. It doesn't matter. We've got this little box right here. We've got 1, 2, 3, 4, so 5. All right, so we see it pop out a bit above. You can kind of tell it pops out a bit above these few lines right there. So that's a little decent indication. And you could have, kept writing that up. It actually had a small hit right there, and you probably would have had your option closed if you had put a stop loss. It's fine. It's totally fine. The next week, it just shoots up. That's an indication that you've broken that previous all-time high. Look, it breaks this all-time high over here. This one, buy here. This is a couple weeks, right? Are we really looking to hold for that long? Some people are. If you buy the 2 years, then yeah, you can hold for months. If you buy the 3 months, you can hold for weeks. I'm going to be doing a lot of, buying 3 months or longer and then trying to sell as soon as we see profits. It's better to take profits than run your chances, but
Yeah. I need to get a lot better at that. Frankly, I haven't been doing an awesome job at covering my ass.
that's one of the hardest things.
Yeah. So I don't really know when I should bail and when I should cash out, which is like the main component. So I need to work on that. I had a quick question based on that. So
Sure.
you're able to trigger, what you're comfortable losing. So like you can say, oh, I'm selling if it goes below this point. But is there a way to do the same thing with gains? So like, say, it's hard because I can't control your screen or anything, but like on one of these low entry points, you decide to go on in any one of these entry points.
Like right
And
here or
yeah,
something?
so yeah, like say you try to go in right there and then it's like going up, and then you're super stoked, but you're like, I don't want to sell now because I think it might still go up.
Yeah.
Like, can you trigger it? So like if it goes down,
Like a touch-
10%.
Oh yeah, totally. So you just have to change your stop loss, right? When you first make the trade, you just, it's a pending order at that point. It's a pending order. Hi Nitsa. I know your mic's canceled, or not canceled, but muted, but hello.
Hi, Paul.
Yeah, so Sean, it's coming up, right? And you just have to change your, cancel your pending stop loss. Your stop loss is not going to be activated until the stock drops, a certain percentage, a certain price, right? I really like this thing called a trailing stop, and you can't do it with options on Robinhood, and you can't do it with options on Schwab either. Which is okay, but I love that it's a kind of order where you say, okay, if the stock drops 15%, or if it drops 15% from wherever it is right now, then you sell it. But if it keeps going up, then wherever it, if it goes up 100%, then drops 15%, then that's when it's sell. It doesn't come back down all the way, right? So it trails, is what I'm saying. We can do the exact same thing. We just have to do it manually, and we use the stop limit or just the stop loss, right? So the stop order is, it stops and then sells at market price. And there's also the stop limit, which is stops, and then you just have your limit order, and it could be at the same exact number price as your stop. That's probably what I would do as a stop limit, with both the stop and the limit the same price. So, if you buy right here, you set a stop limit at like whatever percentage lower you're willing to lose. And then it keeps coming up, it comes up to maybe here or something. You just cancel your previous stop loss, raise it a bit. So now you can definitely secure profits. If it drops below that, comes up more, raise your, cancel your previous stop loss and start a new one, raise it up more. Okay. You can just keep doing that. You get up to here, it's probably going to execute right there. Great. You never had to time anything. You just waited for the market to really just do it for you. It's just the patience there. And it's just all about, being smart with your stop losses. I would not, it's going to be harder to follow all those stop losses when you have too many trades going on. It's not good to have so many trades going on. I've done that before in the past, where it's just like, I can't manage all of this myself. It's better to have less trades that well than more trades that you can't manage. But yeah, you just manually change the stop loss every time it inches up a bit. If we just keep going through this, we get kind of choppy over here. Okay, so how would we treat this, right? So it drives up and we come down. Our stop loss would have been executed, right? We would like to see the stock come higher. This is a big week it had. If you had a limit order on there, like, okay, I want to buy when it goes above 282 or whatever, you could have, had that limit there, could have executed. And if you had your stop loss, it would have been somewhere around here too, comes up again. And then if you have your, you raise your stop loss, then it comes down, right? This is a pretty short time frame though. This is a couple weeks, I wouldn't say this is maybe the best indication, but it's a good, it works. It's decent enough. I mean, dang it. I wonder if I can delete that one. There we go. if you had bought an option right down here in January of 2019, you bought like a, you know, let's say like a year that goes out to over here, right? You could have kept holding it all this time, even, you know, it just depends on what your expiration was, right? If you had 3 months, you could have just sold it here, you know, waited for the pullback, maybe got right around here, sold it either here or maybe even sold it there, right? You know, so we're looking for clean pullbacks. And we actually see right here, let's look at what happens here. So we have this high, and then it's a resistance. Okay, so we don't get above it, but we got this lower low. And then what do we have here? A higher low, right? Indication that the stock is still inching upwards, right? Lower lows are bearish, higher lows are bullish. We break above it. You know, this is a 4-week period of gains. You could have bought there and then waited for your stop loss. You know, this is also right in February. So this is kind of a difficult market to navigate. I would not say like trying to time these kind of things is something anyone should be really trying to do. But if we do watch the chart here, we can see that it has its low, and then it has a higher low, which isn't a bad indication. But we do see that from this high does not go above that resistance line. So that's not necessarily something we'd love to see. But we do have this higher low, which is a good indication. And you'd wait for it to come above this. I don't know what that is. I'm going to delete that. Okay. You'd wait for it to come below. My goodness. Facebook, I guess. I don't want to make a count. Continue. Okay. Continue. All right, here we go. So that's our previous high.
They want your data, Paulie.
They do. They really do. I don't like to give it to them either. Lower low, higher low. But this high does not break above that high. So that's not a good buy indication. If this was coming up above there, yeah, that's a better buy. This is a buy indication right here, breaks above this point, right? I mean, this is a pretty short time frame too. I mean, we could let's see, we can come in closer. And you know, when you come in close, yeah, look at the dailies. That's okay. I think that's fine. And we're looking right here, right? So it broke above right there actually. From what, you know, from my method, I would have said, yeah, that's a good buy zone. It starts to consolidate though quite a bit, you know, and so it's, you know, it does move up a little bit higher every time, a little bit every day. So you could, if you bought, you know, right here, it technically never goes below that, except on this day. And if you had your stop loss, you know, it would have executed a bit higher, right? It does inch up a bit. I mean, so you're not going to lose money by buying right there. It doesn't dump down, right? So it's still, even though it doesn't just keep going up higher at this particular point, you know, we do see a mix of green and red candles here. And I'll go over what the candles mean. But this right here, that's a better indication, right? This is a day though. And so we got to remember right now we're looking at the day charts. So these are a bit more volatile. Now if we move this back to the week chart, you know, we're going to see less movement here, but it's getting quite inflated. I mean, I actually don't really see it here, and Costco's taken a nice pullback. So this is where we are right now. I'm either watching it for to bounce off this line, the support line right around here, or I'm waiting for it to break above this line. Look at this consolidation range, right? This is our range, 330 and 350 pretty much, okay? It's like at 342 right now, right? So we could see it come up a bit, come down just a touch, and then come up more. That would be a higher low right around here, okay? Or we could just see it shoot above this, and that would be, that could be breaking through the resistance. So another way I've learned to like kind of recognize these is by using a couple moving averages. So
Hey, Paul.
yeah,
So one tendency that I've always had with trading is to I always have trouble pulling the trigger on buying a stock when it is at the very high, which is pretty much what you end up having to do. You know, it's not, well, it's at the highest point that it's been, but it's already been there. So it's better than buying it. Just,
yeah, you're buying on a pullback, you mean? Is that what you're talking about?
yeah, but it's still like you're buying it at its, 52-week high probably.
Near that price, totally. Yeah, no, I get it.
So like, do you have any like, I don't know, just kind of insight into
Tips
kind of,
on buying?
well, I mean,
Well,
like
The method makes sense. And it shows that, like if you look at the history of a stock like Costco and draw the lines, it's like, oh yeah, if you'd done that, then you would have made good money. But at the same time, like when you can't see the future graph, it does seem like it might be a little harder to just kind of convince your brain that you're buying super high, but you're still making a good call.
yeah, totally. I'm gonna go back to this one. I was just gonna set this up because I don't think I can put any EMAs on here without making a free trial, which I don't want to do. But I mean, I would just, don't buy on the all-time highs, right? Like just wait for them to come down a bit and see. I mean, Costco, like, if you wanted to buy Costco, like if you're talking about buying stock, I mean, it's different than the options we're doing, right? So the method I would use to buy stocks is different than how I would use to invest in options, like, multiple month expiration options, right?
Got it.
If I'm buying stock, I'm honestly just like, I personally I wouldn't say it's a problem, but if I have a stock that I really want to buy, I don't own any shares, I kind of just have to buy them at right then. Like it's the only way to really satisfy my craving for that stock. If there's a bag of Oreos in front of you, it's like the only way to get rid of your craving for those Oreos is to either eat something else sweet or eat those Oreos.
Yeah. All right, cool.
As primal as that sounds, it's kind of the only way I deal with it. Like, obviously you've already looked at all the metrics and all the fundamentals that are going to make you say, I think this is going to keep going higher, right? The only thing telling you not to buy is that, gosh, I wish it was lower. I wish I had bought earlier, And so you can either buy then or you can wait for a pullback. I would say do a dollar cost averaging. Okay, buy a little bit. Don't buy your whole position all at once. Sometimes dollar cost averaging is a good idea. Sometimes it's not. Most of the time it's a good idea.
Okay. So one more question. So this is for like 3-month calls, right?
Yeah.
Can you also use this strategy for buying put credit spreads?
Yeah, I could get to put credit spreads, Joe. Why don't I'm just going to finish this up here.
Yeah.
Well, yeah, you totally could. I mean, for put credit spreads, we're looking for it to break through resistance and find support. Same thing with the put credit spread. Less looking to break through resistance, but we're more like looking for
support,
solid consolidation, solid growth upwards. We're looking for really quality support lines, right?
Got it.
If I was going to write a put credit spread on Costco right now, I'd look at this and I'd say, okay, where's its first support? It's like right about here, 330. So you definitely want to go below that. Where's its next support? It seems like it's maybe this right here. It could possibly be this line, which is pretty close, but it could also be right around here. Another way to find support is using Fibonacci retracements. And I don't know if I can actually use that here. maybe this is no, that's not it. A Fibonacci retracement is just basically a couple lines. You just start from the top and you pull down to whatever your time frame is. So I pull down from here, go down to here. You know, Costco's not going to go lower than this price. This is in March. If it found support there, it's going to find support anywhere else. Okay. This is support line. Okay. I mean, resistances oftentimes become support lines, right? So this is a resistance. Once Costco, and it will eventually, it will break above this resistance. Then it will become a support. You know, it's simple. It's really simple to identify these, you know, especially if you're looking back at the historical weekly charts. You know, and you want to study a few charts and figure out kind of how you can analyze them, right? And then you can apply that to making actual trades. You know, study a couple charts, see what's going on with those trends, and then make a trade on them. Let's see. So another way is to use something I learned called it's like the 3-8 rule or something like that. It could also be like the 8-17 rule, but we're going to add some indicators in here. Moving average. I wish it doesn't have the exponential, but oh, here we go. Let's go for 3. And I like to use yellow as my smaller one. And then we're going to add another moving average, exponential again. And we're going to go with 8. And I'm going to use blue, dark blue. And this is the way that we can kind of identify pullbacks. Okay, so let's come down to a period when it was a little less volatile. How do I identify a pullback, right? So let's see. I can try to make this. I'll make it red. No, I'll make it pink. It'll be easier to see. Okay. Check it out. As we're watching it break above resistance lines, right? So we see this right here, it's coming, breaks above that resistance line. Okay, we're going to see this pink line come close to the blue line. This is a 3-day exponential moving average. That's like, you know, without even looking, if I could get rid of the prices, we could even see how these moving averages are getting closer. We're not looking for a cross at all. We're not looking for the pink line to cross over or cross above. No, we're just looking for it to, oh, Sean's gone. Let's just say. We're just looking for the pink line to come lower, come closer to the blue line, right? It's just another indication that it's pulling back, okay? And now it's just you and I, Joe. You can have your mic on if you want.
Beans.
And we can even go to the 1-day chart here and look at it, you know.
Wait, how many weeks? How many days
now.
are days? Okay.
Yeah, this is down. Now this is days. I mean, even right here, we see that the pink line's coming closer. If you just had the moving averages there, no prices, you could just tell that, okay, it's coming closer together. That's kind of a pullback right there. It's a pullback opportunity. This is a long consolidation period.
A PBO, baby.
This is a couple weeks right here, or this is 2 weeks, I think, maybe 3 weeks actually. And if I can draw something here, I wonder if I could just do a horizontal line. Here we go. There we go. It breaks, you know, above right about here. And if you had a limit order, maybe you got it in right somewhere around here, hopefully. Or it even breaks above right there. You could even say that was a decent point to buy, right?
Yeah.
And you know, another thing.
So when they're closer together is when you pull the trigger?
Yeah, so I'm gonna admit this person.
And is this for calls again, or is this for buying?
You can use this technique on either the calls or the puts.
Yeah.
Hi, Delaney. You can unmute your mic, or I'll unmute it. How's it going?
It's going all right. How are you?
Good, good. We've just been going through trend and support lines here, and we're just looking at some a couple ways to use some EMAs, some exponential moving averages, to kind of identify pullbacks. But Joe, just to finish your question, yeah, you can use this to indicate a buy opportunity for calls or a sell opportunity for puts. Totally. I mean,
Got it.
this consolidation, I'd say if you're going to do a put here, you know, your closest resistance is actually right. Is like right here, I think, probably something like that, because you just kind of see this consolidation. Yeah, about right about there. Okay.
Cool.
Yeah, right around like the 210 mark. If you're over here at like 320. Now, I always also do say, like, if you're going to sell puts, you'd want to sell them 20% lower than what the current strike price is, at least. And I'd say a 20% pullback is a pretty big pullback for, like, you know, for a month time frame. Okay.
Yeah.
So, you know, you're going to always be pretty good with the 20% rule, I think, because this price right here, if this was what we were doing, like 310, and the stock was trading around here around 330, 325, you know, 20% lower than that is way lower than 310, right? You're down, what, you're like at 280 or something, actually, is what you can buy in at, right? So our support lines are oftentimes going to be closer to the actual stock price than what we'd want to do for selling a put. So we're usually safe on those. We're pretty safe on those, to be honest.
Mm-hmm.
We can go back to here. Okay. Hi, Delaney. How's it going?
It's all right. I overslept a little bit, so.
No worries. We're just having some people come in and come out. I can go through my method all over again, and if you have any questions, that we can go over those first too. Whatever you'd like to do.
I have a more generalized question, just about like what's going on right now with COVID.
Sure.
If that's like okay.
Yeah,
I've heard
anything's
that
fine.
there's like an expectation for the market to crash a second time, because everything's kind of crazy right now. So should I hold off like investing in anything right now, just because there's a chance that I lose a lot?
Gotcha. Totally understand. So my opinion is that depends on what you're doing. First of all, if you're going to be trading options, it's definitely really volatile right now. Prices are a lot higher. You know, things are a lot more dramatic in price changes right now. If you're just buying stock for the long term, I think any time is okay to buy stock for the long term. You can always find opportunities. I mean, Apple right now is down 20% or something like that, a little more than that. You know, if you wanted to buy Apple, like I would say right now is a, you know, fine time to buy Apple. Totally. You know, Apple stock is, you know, you could find those opportunities anywhere in the market. And we've had some major selling off right now. I wonder if I can pull up, like SPY. Actually, I'll go right here. Okay, let's just take a look at SPY. And this is an ETF. Yeah, check it out. I mean, look, it's like major market drop. I mean, if we're going to be realistic about it, like, is it going to be like a major crash like in March? You know, I don't think so. Also, you know, I mean, don't take my word as like, you know, the Bible is not, or whatever. You know,
Yeah.
it's not. I don't know exactly what it's going to do, but if we're just looking at this, and let's change to the week, because that's going to be a bit more helpful for us, for our purposes. And we'll come a bit closer here. And so here, okay, we're looking at a couple of years here, okay?
Mm-hmm.
I mean, look, like, the market drops all the time. I mean, back in 2018, it was all the way here. The SPY is at 290, comes all the way down to, what is the, you know, like 240 or something like that. Okay. So, I mean, so it pulls back all the time. it's, obviously the question you're asking me is like, okay, timing, right? Like, is now a good time to be invested, or should I be waiting? But then
Mhm.
you also you're second guessing yourself, because you say, well, I don't want to miss out if it shoots up, right? So it's definitely not an easy question to answer. Um, all I can say is, we can look at trend lines, and we can look at support, and we can look at resistance, and, we can also talk about how quickly the market rebounded actually right here. This is an astonishingly
Yeah,
quick rebound.
it's kind of crazy to be honest. Like
It
looking
is.
at.
I think it's quite insane. I mean, I think it's reasonable for the stock to have a slow fall. I mean, the sell-offs, this month in September, I think that's very reasonable. I mean, it's a fine thing to happen. And what I'd say is like, okay, will it keep selling off? Possibly. Will it have like dramatic, massive one-day falls? It's maybe, but will it have also massive one-day gains? Yeah, definitely. Um, I mean, if we look at this, we can just say here, right? We broke above. I'm actually gonna go back to this chart because I like this chart more. This is trading view.
Mhm.
Okay, and we can draw a support and resistance line right here. It broke above the previous high right there. Now this is SPY, so you're not going to see it breaking above all-time highs all the time and then making massive gains. And I don't really do SPY because I just think it's kind of like generalized returns.
Mhm.
I do think it's a good place for people to put money, if you don't really want to like get to know a company at all. But let's just watch right here. Like we see the stock come down. It obviously had support right here because that's the lowest it went during this time frame. It comes up, has a lot of great days. And this is kind of a small little pullback, I guess you could call it. You could say that there's a bit of support right there. Okay. You could say there's a bit of support right here even. There's probably, seems like pretty strong support right here actually. Okay. So I'd say SPY, like personally, I would say I believe that it's probably going to have strong support at least around 300, at least. So even if it comes down to 300, it's going to, I think it could consolidate around there. My personal opinion on that.
Yeah.
You're getting a discount even, if you're going to buy like long term right now, 350, the stock's trading at 330, it's a decent little discount. If you have the belief that the stock market always goes up over the long term range, then like, thinking about the short term volatility, instead of thinking about it so pessimistically, we should be looking at that for pullback opportunities, right? Obviously, you can't time when the bottom's going to come, but if you're thinking about buying it, in March here, I personally was saying, okay, it's dropping. I had cash, luckily, and I was saying to myself, I'm going to buy because I know I have a personal faith in the stock market that it's going to continue going up. I'm
Mhm.
going to buy. I just bought regular stock. I didn't do options. I didn't want to mess with those. Those seemed a little too volatile for me at that time. And the options I do, by the way, they're 3 months longer than that. I don't day trade. I can't do that. I suck at that. We see this stock coming down. If I was looking, to buy here, I think I bought some, not SPY, but if we're looking at the time frame, I was buying like around here, I think. Because I was like, okay, could it go lower? Could it go lower? It can go lower, right? So as much as we say how low can it go, we can also say how high can it go, right? So those, the two things, we can't time how low and we can't time how high. We can just look at support and resistance and see how it reacts when it reaches those points. Okay, so currently, we could also see support even at these levels right here. It's very possible, very possible. We could even see it come back up here and actually consolidate between this zone. We could see it come back up here and consolidate in here, we just
Mhm.
don't know yet. And, I wouldn't say, okay, this is a great time to buy SPY because it could go lower. It could go lower. There's other stocks that I would be looking at. I wouldn't be looking at maybe an ETF like this, If you want to keep a very, an ETF looking at ETFs, the other ETFs I like that kind of resemble like tech or healthcare, are the ARK ETF, so ARK W.
Hmm.
I don't know if you've heard of this one. This is a great ETF.
Oh, wow.
This just tracks some of the best tech stocks. I think it's better than QQQ and whatever the Vanguard one is, VOX or something. I think it's a bit more fresh, as I guess I would say. And if we're looking up here, right, I mean, it seems really inflated. I mean, check out these volume lines here, right? It's a bit overextended in my opinion. I mean, you do have some red days in there, but it's mixed. But looking back here in 2019, during this consolidation period, pretty low volatility in comparison. Even during this growth period, volatility is way lower. The volume is way lower than right now. I mean, we can expect there to be high volume right now just because there's such a larger influx of people in the market, I'd say, investing. But I would not say that these are like reasonable and reasonable volume levels that can really be supported long term. I mean, their volume levels should be coming down like to at least right around here at some point. I wouldn't say I wouldn't want to buy a call option necessarily on ARKW right now. Okay.
Hmm.
I mean, I may be interested in buying stock, but I don't think I'd be interested in buying a call option. The difference there is the expiration. I mean, maybe I'd be interested in buying a leap. A leap is like 2 years out, Yeah, totally a leap. Nothing short term though. No, not on these ETFs. You got to find opportunities in individual stocks. That's how I think of it. I mean, individuals, because this is tracking so many different stocks.
Yeah.
The support and resistance lines are going to be, further apart, different. It's just taking an average. So it's just a different beast, I'd say. You got to look for individual opportunities. So,
Hey, Paul.
yeah.
I gotta go.
Okay, cool. See you, Joe.
All right, thanks for all the info.
Yeah, no worries. This is recorded too, so it will be posted.
I love it. Thanks,
Cool.
man.
All right. See you, Joe.
See ya.
Okay. Yeah, so I guess my current market opinion is like, I can't tell you how higher it's going to go or how much lower it's going to go. I mean, it could go higher, it could go lower, So when someone asks me if stocks are going to go up or down, I say stocks go up and they go down, right? So we can't time it. All we could just look for are like, pullback opportunities and see where is there going to be support, and then wait for those support lines if you're going to be doing trading. That's like ultimately that's what day traders do. Day traders just try to find where support is, and then they wait for the price of the stock to bounce off that support line. People are looking for reversals ultimately all the time. I just look for reversals on like the monthly time frame, not on the weekly, not on the daily time frame, because I personally, I can't move that quickly. Like I just don't interpret the information as fast as some people are great at it. I'm not though. I do think I do enjoy like 3 months or longer, 6 month options. I wonder if that was maybe more than what you're asking, but yeah.
Oh, that's fine. Like I said, I'm relatively new to all of this, so like any
Okay.
is kind of like building up context and
Yeah.
helping
Okay.
get a feel for what's going on.
Cool. Is there anything you want me to cover? Do you want me to give you like a general overview of like stock investing? Do you want me I can just talk about stock investing. I can avoid options if they're too complicated or just too much to kind of interpret. And I think it's good that before you start investing in options to have a good base of knowledge of like stocks in general.
Yeah. If you just want to give like a generalized overview, like that would be pretty good, I think.
Sure. So, I mean, I'll just talk about how I would start investing. So personally, you look at how much money you have that you don't need to use, right? So you don't want to invest any money that you need to use for rent or for whatever it is, you can have a small amount of savings. Personally, all of my savings are pretty much in the stock market, except for, a certain amount of cash. just because I don't like to have cash sitting around doing nothing. And if I'm not going to use it, then I'm going to invest it, or at least have it waiting on the sidelines for an investment opportunity like a pullback. So, first thing I'd say is, just think about companies that you know already, right? So about Apple, about Tesla, you know about Starbucks, we know about, Costco or Domino's, whatever it is, And I would say invest in what you know. Personally, I don't know anything about energy, utilities, basic materials, like that stuff. To me, I don't care. I care about technology. I care about healthcare. I care about some kind of financial companies, some innovative financial companies. I care about innovation, basically. That's kind of how I know how to invest. That's what I know how to invest in. I don't know other things. I would just, think about what you're interested in first. Like, are you interested in technology? Are you interested in healthcare? And then go search for those types of companies, because that's what's going to give you the most joy. Okay. I'm going to admit someone in the chat here really quick. Okay. Hey, Brandon, how's it going? Your mic is off. No worries.
Hey.
I'm just talking to Delaney here, just giving him a little insight onto how I kind of invest in stocks, and then we can go back over the support and resistance lines again. Joe and Sean just left a second ago, but we can still go through those because it doesn't take too long to really talk about support and resistance and trend lines. So if you just hold off for like a couple minutes, I'm just going to finish my conversation with Delaney.
Okay.
So, okay, so there you go, Delaney. You're looking for sectors and areas that you're interested in, okay?
Mm-hmm.
Let's say, what, do you like tech? That's usually what.
Yeah, tech's pretty cool. So
Yeah, tech. Okay, so what's the next step? Either you know of some companies or you go out and look for some using like a screener, and there's some good screeners out there that are free. Yahoo Finance, it has a decent screener. And you can look at some different numbers here. And then this other site, FinViz, has a good screener. Also has, I think, the layout's actually kind of easy to interpret here. And then I'd say, play around with these screeners. I'm not going to go through all what these fundamentals mean. You can ask me, though, anytime. I just don't want to use that time to kind of explain everything. But, I like high growth stocks. So I would go over here, sales growth quarter over quarter. I'd look for over 30% growth. Okay, I'm actually going to go and I'm going to look for price to sales of under $10. Okay, and I'm going to look for a quick ratio of like over 1.5. See how it keeps getting more narrow and narrow. I'm going to look for insider ownership of over 10%. All right, that narrowed us down quite a lot. Look for operating margin that's positive. And look, okay, we've really narrowed ourselves down here. Sweet. Okay. And all right, I recognize Alibaba in here. I recognize XPI. I recognize Flowers, 1-800. I recognize Ocean Bio. Yeah, Alibaba. Long term, I think they're a great investment. I recognize Opera, right? So then you just look at these companies, right? We could just look at the XPI because I really do like that stock, actually. And, get to know the company. Go to their website. If you click on this name, you can see their website. And there you go, investor relations. If you ever want to look for companies, like how they treat their investors or like what they do, really, sometimes I actually have trouble like figuring out, okay, I have to like really kind of search hard. Like some of these cloud companies, tech cloud companies, it's like, what do they actually do? I know they're cloud companies. I know they do some kind of like computing. They offer some kind of service, but to really know what they do, you got to go to their website. And don't go to their, you can go to their consumer website, otherwise, if you just look up their name and look up investor relations, you'll get their investor relations website. So if you want to look up Starbucks investor relations website, Starbucks investor relations, right? Here we go, IR home, there we go. So you can see the Starbucks investor relations website. Here we go. Okay, you can see their financial data that they supply. You can see their governance here, the board of directors, check them out. Check these people out, right? Yeah, Howard Schultz, and he retired a couple of years ago. He was the founder, CEO, and so that's what I would do. I would look for companies, and then I am looking for companies with decent growth. So that's your sales. I'm looking for companies that don't have more cash than debt. So that's current ratio. A current ratio of greater than 1 means that company has more cash than debt. Now, that's not always a bad thing if it's lower than 1. Sometimes debt comes in the form of like really long-term loans, so companies can do research and blah blah blah. So you go use FinViz or use Yahoo Finance. FinViz is kind of easy because it puts it all on one page. And just look at all these things and look at, okay, see, what does price to earnings to growth mean? What does, debt to equity? What is quarterly earnings growth year over year? And you just look it up. Like if I wanted to say, what is PEG? What is PEG? I'm just gonna look stocks at the end so that it knows I'm talking about. There we go. Investopedia has a ton of great definitions, and you can always ask me about what any of these things mean. But sometimes they have even little nice videos that are easy to use. But yeah, that's how I would do it. I would use a screener looking for companies that I, like tech companies or whatever, real estate. I like real estate too. And then, I'd look at their charts or something like this, right? So if we wanted to invest in XPI, I'm going to take it back here to Trading View. And we can actually do a little support and resistance stuff with XPI right now. So you can pay attention to this, Brandon. This has some crazy, incredible growth. And we're looking here at the weekly charts. So each one of these bars is 1 week of price action. Okay. And let's see, what is it goes all the way back to 2015. Why don't we start right around here in 2017, when it was at $3. Now, I'm not saying you would invest in this company at this price because it was quite small at this price. It was probably $1 million market cap about. Now it's of almost $3 billion. But basically how support and resistance line works. Oh, we can just press shift. Oh no, I can't. Okay, wait, never mind. I usually use Charles Schwab to do chart analysis because that's just what it's right there for me. But this is Trading View. It's open to everyone. So how do we find places for opportunity, right? So if we saw, I'm just going to call them XPI, EXPI, or EXP. If we saw EXP coming up here, sweet trend, sweet positive growth, and I'm right now still no, the buying opportunity. You know what? There's actually some small pullbacks in here, and we're looking at the weeks. Remember, okay? So this isn't day trading, guys. We even got one right here too. Look. All right, so if we're looking at right here, we see it coming up. It has a consolidation. Consolidation is when it's kind of sticking between a certain range. Consolidates, breaks out, right? So this is actually a week. So you could have seen it break out on a Monday, put in a order to buy, set a stop loss in there so that in case if it does drop, you don't lose more than you're willing to lose, and see it come up, right? And it would consolidate again here. It actually never comes lower, right? So actually your stop loss would not have gone through. Because this is the lowest it goes. Your stop loss would not have executed if your stop loss was right around here. Mm-hmm. You see it come back up again. It shoots up, and then it tanks down. I'll say this: as you're holding, let's say a call option, you're going to be moving your stop loss up and up as the stock continues to grow. I'm not going to keep my stop loss down here if the stock's up here. I'm going to move my stop loss up here so I can at least lock in some gains if the stock takes a dip, okay? And I'm going to continually moving it up as the stock price moves up with it, right? I'm going to cancel my previous stop loss and open a new pending stop loss that's going to execute anytime the stock goes below that stop loss. The stop loss is there so we don't lose more than we're willing to lose. And it's there to lock in gains in case the stock takes a large dip. it takes a big dip here. Maybe your stop loss is right there. It executed. Look at that. That's a great gain. You could have even bought right there and see nice gains. And remember, these are a couple weeks, but we're going to be buying calls that are going to be expiring out here. Okay, 3 months, more than that, like even out here, right? So you sold your EXP, and now you're going to wait for the next pullback opportunity, right? So we actually see some resistance right there. So we're going to draw that line. Okay, we see maybe some support right here. Okay, actually bring that a bit closer. But we actually see it break lower. So this is a low. We call this a lower low because it's lower than the previous low. Okay, we see it come up, dip down a bit. All right, that's a higher low. That's an indication of a bullish trend. Okay, you see it do a higher low, low, higher low. It's a couple weeks lower. All right, you could even consider this to be technically a higher low, but it's kind of a bit close and wasn't, you know, I'd want to see it break above this consolidation period actually, right? So it kind of breaks above there, but it really breaks above right here. You could have bought there, you could have bought here, and look at this growth, right? Obviously we have a couple, you know, 2 months, 2 bad months here, but you're going to get your gains because you locked them in by using a stop loss, right? This is a week. This is, you know, you could, how hard is it to, like, you know, buy a stock on a Monday, put a stop loss in, let it come up a couple days, put another stop loss in, it falls, and then it executes, you made some money. You know, it's not too hard if you can even do this after hours. You don't have to do any of these stop losses during the day. Like you can put orders in after hours, and you could only have one going at a time. I would, you know, don't overextend yourself. So let's see what happens. It comes down, finds support right here. This, again, a higher low. If we're looking at this right here, see, I mean, it's a higher low. That's bullish. That's a good sign. Where do we want to see it go above? We find resistance up here first. Do I consider this a pullback opportunity? PBO is what I'm calling that. It's a PBO. Pullback opportunity is a good place to buy when the stock is consolidating and then going to run up again. Would I consider this a pullback opportunity? You know, I don't know. I'm not sure if I would actually. I don't think I would because I just saw all of this negativity, you know, just because it finds a little bit of support there. I could totally see it coming back down again, like totally. You know, I would not buy a call right here. No, there's so many other opportunities out there in the world, you know, for stocks. I'd want to see it come above this high actually, if I'm going to be honest, right? And see what happens. It has this horrible downtrend. Okay. We see it find support down there, right? We draw a little support line. Comes up. Okay, that's our new high. We're going to call that our new high. We can even consider this actually the previous high. But it comes up here. I'm not even buying it. There's no indication that it's not going to keep going lower yet. Although this is a nice bullish run, this outgoverns this. Okay. What do we see here? A little pullback, little support, new support line. All right. I would like to see the stock go like this, come down, come up above that, and come down just a bit right to here. Instead, we see it come down, come up. So this is a higher high, and this is a lower high. Not a good sign. Not a good sign the stock's going to keep going up. You know, okay, higher high, we got our low, lower high, and then the same low about the same low. Not a buy opportunity. It's not higher enough. It's not as high as the previous low, okay? And it consolidates between this range, you know, and I would have bought if it gone up above maybe this price right here, or even higher, you know, higher than these highs, right? It doesn't though. It just doesn't really shows good signs of that kind of extension. and it does come down again. Okay. And we see it come back up. New support line down here. Okay. Okay. Comes up to a higher high, a low, a lower high, not a good sign. Okay, that's our new inflection point, we could call it. And this is a lower low. This is the low, this is a lower low. Not a good sign either, right? So I still haven't seen any pullback opportunities. There hasn't been any pullback opportunities in my mind since right here. This was the last opportunity in 2018, okay? That was the last time I actually thought there was a good opportunity. Now, all right, dips down. This is March. This is the crash that we just had. It comes above the previous highs. That's great. That's a bullish indication. Okay, breaks resistance. I'd say that's a good sign. That is, to me, that's a great sign. That's even a buy opportunity in my opinion. Comes up, you know, maybe this is a week. Maybe you realized your gains in a week. All right, and you're still watching it because you want to get it back into another opportunity. Pullback opportunity right here. We've got our highs right about there. We're just waiting for the stock to jump up above that resistance. It jumps up. Sweet. That's an opportunity to buy. It runs up. Look at this. A whole month. That's massive. That's 100% gain just on the stock. I mean, imagine if you had a call option. That'd be, 500%, right? But we have patience though. And that's why we're able to we're not timing this. We're just waiting for the opportunity to come to us. We're not going to time something, we're not going to speculate on where the price is going to go. We can't determine that, okay? We can only wait for the stock price to go above our resistance lines, okay? And it wasn't that hard to chop this up. We're not looking at any crazy indicators, nothing like that. If I'm going to look at this stock right now, this is what I'd say. Okay, look, it's finding resistance up here. And Brandon, if you have any questions at any point, you can just ask away totally. Right, so we found some resistance. It seems like it's kind of consolidating. I would not say there's a buy opportunity yet. Okay, this is just a couple weeks. We want to see a couple weeks of, we'd want to see it jump above this, then to buy. Okay, but if we're also, if we're looking at the stock price in relation to volume, look at volume. Look at volume now. Volume is insane. It's going to come down. Okay, a stock can only ride on a high for so long. Right now, for this stock, no buying opportunity. No way. No way. You could see. Look at the closest support line. Really, the closest support line was back in 2018. I mean, maybe you can find support right here. It's quite possible, but I'd have to see the stock price testing that support line for me to believe that there's good strength in it. Okay. We're not going to time it. I'm not going to guess it's going to go up or down. I'm going to wait for it to break between this support line or break between this resistance line. Or I'm going to wait for it to hit this, go up to here, come down to a higher low. That's a buy opportunity. If it was to come lower, same high, same resistance, come lower, not all the way down to this support, then come up, buy. That's a buy. Okay, we have to wait for that though. We can't just guess that it's going to happen. Brandon, is there any company you wanted me to look at?
Overstock.
Overstock. You know what their ticker is? OSTK or something? Yeah, I knew it. Wow, nice growth. Oh, check out that pullback. Okay. I'm gonna get a sip of water really quick. Oh gosh. I'm not sure if the Zoom is gonna end because it's almost 10:30. I can keep going to answer your question, but I just don't want it to end. If it does, Brandon, And Delaney, I'll just set up a new link and send you the new link if it ends, okay?
Okay.
So don't worry, I will get back, I'll send you the link if it ends, but let's just go through this right now. Okay. Crazy little ride here on Overstock, Brandon. Let's see. This is a downtrend. This is a major downtrend that was happening. It just peaked and it popped. Check that out. Back in 2017. Actually, we want to no, yeah, we want to be under it. There we go. Okay. And let's just start from right around here. What do we see? Some consolidation, okay. I would say maybe draw a support line right there. I mean, that resistance line. And this could be my first support line. So far, not a good sign. Check this out. Low. Okay, that's our high. It's lower. It's a lower low. It's a bad sign. That's not a buy. We'd have to see this stock come up and then have a higher low. It does not do that. It creates a new support line that's lower than the previous low. Not a good sign. It never breaks above this. And here's actually a little trap. Okay, we see the stock shoot up above right here. This is actually, to me, this would be a bullish indication. Okay, we got a low, lower low, lower low, higher low. I would say, yeah, bullish. Breaks above that resistance. Okay, that's definitely a buy, I would say, if I'm watching. Oh, Brandon left. Well, I'll just keep going. This is definitely a buy, I would say. Okay, on a call option, even on a stock, I would say that's probably a good buy. Obviously, it's hard to time the market. There must have been some kind of news around here. There must have been some kind of news, totally. But what happens, it comes down. But why it's okay is because we had our stop loss in there. So we didn't lose more than we were willing to risk, right? Could have been 15%. That's a fine stop loss to have, right? Maybe you even came out ahead a bit if you're able to get in at lower price and then sell, maybe around here, But we had the stop loss, so it's totally fine. It worked. It worked out great because we didn't lose more than we wanted to lose. Okay, and poured some major downtrends. This is a bearish investor's dream here. You've got downtrend. Oh wait, Brandon's trying to come back in. Okay. Oh, here he is.
I don't know what happened.
All right. Are you in? You're in there now. Okay.
Yeah.
Cool. All right. I guess it's just letting us keep going. I'm going to come back here.
Let's see the most past 3 months.
Okay. We'll go there. I was just saying, I mean, this is, we're looking at this in a bullish viewpoint. This is how a bear would look at it, right? Sweet downtrend. Okay. You've got a low, you've got a lower low. They like lower lows. We don't. Okay. We like higher lows. So what are we looking at here? We're looking at since. I'm going to try to shrink that a bit. Okay. All right. So if we're looking at this right here, there's really no upward trend. Overstock has not given me any indication that it is a quality upward trending stock, if I'm being honest. Apple consistently drives up and up every year. It doesn't have negative years. It just doesn't have negative years. Okay. Whether it's up 5% or up 30%, it just doesn't really have negative years. Its general 5-year chart on Apple is super positive. On Overstock, no way. This does not make me say, yeah, this stock is coming up higher, But let's look at the recent stuff because that's what you really want to get into, you know, because we're looking for the market opportunities. All right, so we're coming into the crash right around here. Honestly, at this point, Overstock was cheap as bones, cheap as beans even. You know, I mean, it comes down as to the lowest point even at $2 here. You know, I would say if I was looking at this, I'd say I'm not really confident in this company, you know, and owning this. But if we're going to mark it up, let's do that. So right around here, we've got technically our previous high. I mean, this is our high, but this is the closest high is what I'm talking about. Comes down. I'm going to wait for it to come above that. Okay. Comes above it, breaks up. You know, if you were really bullish on Overstock, that's a buying opportunity. And if you're watching it, yeah, it's coming up. I'm watching it too. You know, it's like, okay, yeah, it's got a nice trend now actually. And looking at the past, it comes up and it comes down. I mean, it peaks up high and it peaks down low. You know, we've got nice growth. I mean, I should make this actually a bit more, make it steeper. You know, it pulls back just a tiny bit, just a bit right here. You know, if you were watching closer, you probably could have found that resistance break. It breaks above this resistance. That's a bullish indication, Brandon. You could have bought here and said, okay, that's a bullish indication. It breaks above resistance. And it rides. It rides so hard. It's a really hard ride, for lack of a better phrase. And this whole time we had a stop loss, blah, blah, blah. Right now, let's see. This is downtrending hard. Where's our support line? Our lowest support line is right around here. I would want to see Overstock come down, come up, maybe come a little lower, right around here, and then shoot up, and actually shoot up like maybe above 93 or so. Okay. I am not thinking about buying Overstock right now on a call. I mean, if you're buying Overstock on the long term, Brandon, you know, right now might be a good opportunity to buy. I'm a bit skeptical looking at their past and seeing how people have manipulated them. Right? I mean, looking at their past, we can kind of help us see how the stock price reacts. We've seen this before. It peaks and it pops. I mean, let's see, it has happened previously even more. No, but there, look, I mean, not a good sign. You know, I mean, its volume is green, it's come green, and we got mixed signals here, it's come down, it comes down. We come back here, you know, it's pretty green coming up here. And now we're getting mixed signals again. I would not buy right now. I'm not confident in this stock, to be honest with you.
Didn't it hit a support? Did it hit a support level right there at 63?
Yeah, I mean, that's a support it created itself. So investors said, this is, you know, buyers said, okay, and this is a good price to buy at. So that's a good sign. Okay, that's our first support. But we want to test the support twice at least. You know, we want to see it bounce off the support, come down a bit, or break a resistance. You know, we see this resistance somewhere up here. You know, we actually see our first little resistance right about here. Okay. And they could consolidate in between here, right? And we'd want to wait for it to really, you know, wait a couple weeks. It has to consolidate for a few weeks in between here and break above this and shoot higher, okay? Or we see it come down, come up, right as it is, come a bit, just a touch lower, not lower than this, not even at this level. We want to see it come here even, right there, and then shoot up above this. We want to see it come above this green bar, this green candlestick. I would then say, yeah, I think that's a good sign. The
So you're not going to buy it till it gets above 76, 77?
No, not if I'm trading options for 3 months. Okay, I mean, if I'm looking to buy stock, like long-term hold, like, you know, 2 years, 5 years hold, yeah, I mean, this is a pretty good discount if you believe that the stock is worth this much, which, you know, obviously if we look at the past, at this point, some people thought it was worth $80. Obviously, if you bought in January 2018, you know, if you held, you would have been, you know, up more than what the market normally is, which is up to 120. You know, I mean, 80 to 120, that's what, like 40, 50% almost. Yeah. It's 50% over 2 years. It's 25% a year. That beats the market. You know, that beats the NASDAQ. The average is, you know, it's 12%. That's, you know, as long as you're getting 12% a year, you're at least doing average. Buying stock, I'd say maybe. I don't know if I really like Overstock as a company. I just haven't looked into them a lot. I just don't know much about them. I think they like sell things online, right?
Yeah. So do you think I should take my $250,000 profit and run, or? I'm just kidding.
Yes. Yeah, totally. I mean, put it all into Overstock. No. Yeah, I mean, right now I'm not very comfortable with it. I wouldn't see anything here that indicates that it's going to keep going up higher. Okay. You know, so that's all I can say about it. If there's any other companies, I can look at those too. I'm looking at Costco to do Costco calls. I can go on Robinhood and show you how I kind of search for which strike price to look for as well. I can do that.
What do you mean?
Well, you know, when you if you're going to buy a call, like obviously there's a ton of strike prices. Like, do you buy one in the money or out of the money? I can go over that kind of stuff.
For what? For which one?
I can go for Overstock or Costco or any company, honestly.
Let me see. Let me look.
Yeah. These are some companies. I mean, AMAT, Viva, Etsy, Globant. These are companies that I'm always looking at right now that I do like.
How about Tesla?
Oh God, Tesla. Sure. Let's look at Tesla. I'm so scared of Tesla.
Tesla's pretty spooky right now.
Tesla just is an odd, you know, they're a curveball. You know, it's like hard to predict. Not predict. It's hard to you know, be patient about them because I just don't know.
You know what's a good one? Thermo Fisher.
Sure. You want to look at Thermo Fisher? TMO. Oh yeah, you showed me about them. Okay. Oh, totally. Okay. I like this chart. This is great uptrend, Brandon. Already. Magnificent. Beautiful. I mean, this is wonderful. Wow. Okay. Yeah, this is a super candidate, I'd say, for buying calls. Okay. So let's break it down a bit here. Let's come back to like 2018. All right. So I'm not going to mark it up. I'm just going to use my mouse cursor here, but okay. Consolidation. So what we have it break above right there. I might mark it up a bit. Okay. It breaks up, comes down. That's a bit of a higher low. It actually breaks above here. It gives us a bit of a fake out actually right there. But if you had the couple months out, you would have been fine because it does come higher. Right here, breaks out right there, and it comes lower. It's, you know, what we're looking for is these higher lows. If you're thinking about it even longer term, you could say, well, this is actually good support. And you can see that this is nice support line. That's technically a higher low than the previous one. You could have said this is a buy opportunity. This right here was a super buy opportunity, in my opinion. This right here is a better buy opportunity than here or here. Just because this gives me, why? Because it's the best. Because this time frame, you know, that's a few months. You know, that it's technically a higher low, but they're not that close together where I'm super comfortable with it. This is a bit closer and feels a bit more, it's a bit higher, right? So you see how this slope here is lower. The slope on this one is greater. Okay. So, and even if you weren't comfortable buying at that slope, we break above it like right around here on this candlestick in October. Okay. And then look at that. That's nice growth. That is a month and a half about of solid growth. We're reaching 2020 right around here. Okay. Bearish. Everyone else was bearish. Actually, like, I mean, it's actually coming a bit higher and just slightly dropping. I mean, it has some big green days, obviously, is what I can see from TMO here. Support right there. Previous resistance, it actually seems like it's having resistance right around there and breaks up. Nice. And it breaks above this one too. Solid. That's a buy opportunity if I'm thinking about it.
Which
Reaching
point
higher
was
highs.
the buy?
If I'm coming in close here, and we actually get real close down here, I would have said right there was a buy. I wonder if we can we can bring this down to the daily charts too, just to see how that looks. Sometimes you just have to break it down to daily charts after looking at them so closely. I might say that this was the high. Okay. Check that out. It's even growing pretty strongly here. It has these relatively, has small pullbacks every once in a while. Okay, so we see it come up, come down, come up, pull back a bit. It's a higher low. We like to see that. That's a good sign. I'd say that could even be, that's a buy opportunity. This is a buy opportunity because it tests that line almost. I don't know about that because it's actually a red day, a red week. Comes back down, another higher low. That could be a buy opportunity right there. Okay, it doesn't seem like it wants to break above this resistance line. So we're not super bullish, but if we like the stock long term and we think that this is a solid trend line, especially from breaking out from right here, we're getting consistent higher lows, higher low, higher low, higher low. Okay. Finally, right here, nice candlestick. That's a nice week. That's a bullish indication, I'd say. If you're buying the weekly options, you're swinging, you're day trading. That's dangerous. If you're buying 3 months out, check this out. You're in May, we're going to look towards August. Damn, look at that. I mean, come on. Even if you hold for a couple, you have to have patience, and as long as you have your stop loss in there, you can't risk more than you're willing to risk. We don't
Stop loss if you own it. How do you do a stop loss on options?
Oh, same exact thing. You just say, if you bought one call option for like $4 a contract, which is $400,
You just put the stop loss in
you
there.
say I'm willing to risk like 20%. So 20% of like 400 is what, like 3.2.
Yeah.
So you just say to put your stop loss at 3.2. If it goes below than 3.2, then it executes. Well, okay. Well, at least you didn't lose more than you're willing to risk. You could go lower than that, But if you're watching the chart, making sure it doesn't drop below your, have alerts on the price. Like, okay, make sure it doesn't test lower than these lows right here. I mean, it's not though either, right? So it's coming lower, but it's not lower than the previous low. It's coming lower, but it's not lower than the previous low. It gets pretty close there, but it's not lower. It's not. These are the dailies. Here is even here, it kind of tests right there, but it's, this is not I would say this is maybe not my favorite buy opportunity. I'd like it if it was here and then maybe stopped right there, but it goes a bit lower. I would like to see it maybe at that point come up here, to a lower right around here. And then it breaks above this previous resistance right there. That's a good sign. It does come down, but it breaks above right here. This is a buy right around here on this day, in this area even. Could have bought in here and check out the growth. Dang. It's great. Okay, so let's look at what we're happening right now. I'm going to move back to the weekly charts, and then we'll move closer into the, okay. Where's our resistance? Right here. Where's our trend? Right here. I'm gonna go like that. we have a little support right around here. And now this is what we're watching for, Brandon. We're waiting to see, does it go above 435, what its all-time high is? Does it go below 408 or something about? Okay, it hits it, finds resistance. We want to see it either hit this, bounce up above that, or see it maybe go a little lower and then shoot up. We do not want to see the stock come lower than this price. If we see it go lower than that, that's not a good sign. Not a good sign. So we're waiting on it right now, Brandon. We're just going to be waiting. We can move into the dailies to see what it's doing on the dailies. You know, okay. The dailies is going to give us a bit of a. The weeklies give us a bit more of like a generalized idea. Dailies, though, they do give us a better idea of like where the actual resistance lines are going to be. Okay. Scratch my back. Okay. Obviously, we have it's down, trending downward. And I'm just going to, okay, reading candlesticks, really easy. The little lines, those are just the highest point of the day, and the lower part of the line is the lowest point. This bar, if it's red, that means it was down that day, and if it's green, that means it was up that day. You're probably like, okay, why are these green bars coming lower and lower? That's just because it's gapping down and then coming up a bit. So you know what that means? It just means that it's you know, things happen in after hours market. So it's gonna see it opens up here and then it closes down there in red bars. For green bars, it opens up here and closes right there. Oh, okay, I'm gonna see you. See you later. Okay. All right, now it's just me and you, Brandon.
Yo.
Hey, boyo. I'd like to see for it to come up from right here, keep coming up higher. If it comes up again, that's a good sign. If it comes up this line, another good sign. Thermo Fisher might be a good candidate actually right now. I mean, thinking about it, looking at this chart.
Yeah, they're good. They just built a $40 million facility to build vaccine canisters or something like that.
Okay. Yeah, I'm definitely going to look at the tickers. Why don't we look at some of the chains? Okay. The one thing I do like about Robinhood is I really like their chains.
Yeah.
So one thing I've learned about buying options is that you don't want to buy the weekly options, right? So the weekly options are what the day traders use and the swing traders use. So you pretty much only want to be buying every third Friday of the month, right? So November 20th is the third Friday of November. December 18th is the third Friday of December. Actually, this January 15th is the second Friday, but typically you want to be buying the third Friday. For Thermo Fisher, though, I'm looking at either December or January. January is a bit safer. And let's see here. So they're pretty expensive. I mean, we could do a what's it called? A spread here, or we could buy one out of the money too. So some of the things I'm going to be looking for, typically I'd like to have a delta that's you know, let's see, we've got a 0.45. I mean, a delta of at least 30 if you're going to buy out of the money. You know, these don't have a lot of volume, so these aren't really what we're looking to buy here. And then you're going to want to have a lower, I mean, the lower, so you know what theta and delta are, Brandon?
Or no, remind me.
Okay. So theta is like, it represents time decay. And time decay is, you know, options are made up of two things, time value and like intrinsic value. Time value basically just means every day the stock's going to lose 3 cents.
Yeah.
Even if TMO does not move at all. It's going to lose 3 cents every day. Delta means that this is how much the stock is going to move if TMO moves $1. So if TMO moves $1, the stock's going to move up 6 cents, or this option's going to move up 6 cents. Okay.
That's it?
Yeah, but I mean, think about it. I mean, 6 cents, and you're only paying $1.85, right? So I mean, TMO is worth $420, right? So if TMO moves 1%, that's like $10. So that's like, you know, 60 cents for this option. But you know, we're this is a bit high in my opinion. We're going to be coming down here. Looking back at this chart, you know, maybe around 440 because that was the previous resistance. Yeah, decent delta. 0.43, not the best, I would say. They're expensive. These are expensive options. I mean, that's going to cost you, what, $20,000, and not $2,000 to set this up.
What about a spread?
Yeah, I would say I think a spread would be better, and we'd probably want to come down here for our spread. Maybe something like, let's see, maybe like, where is it support? Like 400. So maybe buying this 390 and selling that 400. $10 difference is going to cost us $6.60. We could even go for like, we could even go for this 420 here. That's probably going to be our cheapest spread. So it's $560 to set this up. The most you can make though on this is $10 because of the spread difference. So
what about your put spreads that you used to like?
Oh yeah, I like, you know, I totally do put spreads. So let's see, that's below 400. I mean, I like to go 20% lower usually at least. So let's check that out. Okay, so it says 20% is about 340. So let's go to puts. And I do like Robinhood because you can see how much they've changed, right? So I'm going to want to buy the put that's like way lower than it is, right? So let's see if we're looking at maybe this 360. And I'm going to sell this 370. $1.90.
$190 off of
yeah, but this is January 15th, so this is a bit further out than I'd want to go for my puts.
What's our investment? $190 off 1,000.
So we get paid $190 and we risk $810.
So that's like a what percent return? You divide 190 by 8?
I do 1.9.
Is it 1.9 divided by 1,000?
Yeah, well, I mean, typically what I do to like lower what my actual averages are, I do whatever I make divided by the total spread. So I do 1.9 divided by 10, 19%, you know, until January. That's not bad.
That's good, net.
That's pretty good. I mean, I would look at maybe the closer. Let's look at like November. For a put credit spread, yeah, I definitely like between 30 and 45 days. For like buying a call, I like to be more than 90 days.
So let's do 360, 370 there.
Let's see these things.
Maybe 370, 380. Look at that one.
Yeah, that's a better payout, and still pretty close. So let's see. We're gonna sell this one, and we're gonna buy this one. Yeah, I mean, so here, the other one that was expiring in January, that was paying us $1.90, so a better payout, but this one's not that far off. If you think about it, the other one was giving you 19% over like 4 months. This one's giving you 16% over like 40 days, 45 days. So it's a better turn. It's a better rate of return.
Are you going to place it tomorrow?
I mean, maybe I'll place one on TMO on Schwab. I'll do that, and I could do a little write up on Options Club and something like that. I mean, I think this is pretty safe around these levels. I mean, healthcares tend to be pretty safe usually, especially one of this size.
So it can go down like 15% and we're good.
I mean, it's already down from what, 440, and it's at what, 422. So
We only have 9.5% to work with.
it's down like it's down about 5%. It seems like right now.
So yeah, if we do that put credit spread, as long as it doesn't go down more than 9.5%, we're good.
Yeah, no, totally.
I'm gonna do it. That's a good deal right there.
Yeah, no, I definitely just set out some alerts. Like if it goes lower than like 410 or 400 or something, that's all I would say.